What's going on, everybody? So I kind of want to do a little bit of a training video here. I see this happen a lot with a lot of newer traders and a lot of people who haven't really been too experienced with a ton of hours of screen time. And this is something that even I have done, we all do as a trader, and something that you need to work on if you want to be a more consistent and profitable trader. And that thing is not taking boredom trades. I know you guys have maybe heard this before in the past, but putting on trades for the sake of putting on trades. You wake up every day, you're excited, the weekend comes, it rolls around, you can't wait for Monday, you can't wait for the bell, you can't wait for the next day, you can't wait for this. You're always in, this mode of go, 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 go. And realistically, when it comes down to it, that's not the way that the stock market works. Stocks go up and stocks go down every single day. There's thousands of stocks that are can be traded, and at any given point, something is always moving up, something is always moving down. A lot of times, there's no good setup going on. You may have heard of another stock that's moving. You may look to social media and see, this person is in on this stock and it's up 20, 30, 100%, but you don't know the backstory. You don't know how long they've been holding the stock. You don't know, what their indicator was. You don't know, what was the reason for taking the trade. And then instead you come to your portfolio, you come to your watch list, your stocks that you trade, and you force trades. Okay. Today was a very, very perfect example of a day where you could have really got yourself chopped up. Today was a day, where you could have put on boredom trades and, not really had a technical reason as to why you were putting on trades. A lot of stocks popped off of the bell and then they immediately retraced. A lot of stocks didn't move lower, but they went down. So, or vice versa. A lot of stocks went down, but they didn't go lower. So what that means is that every day a stock is going to move up, it's going to move down. Intraday it's going to have its dips, it's going to have its highs. And a day like today, I'm just going to take just a random stock. Everybody knows the stock Apple. It's not really a big mover. It's not going to give you huge swings, but perfect example here. 6 o'clock bell opens, gives you this big spike off the open. Okay. So within the first 30 minutes here, gives you this big spike off the open. What tends to happen is a lot of traders do not get into this move either because they're not equipped with the right trading plan to scalp these plays off the open, and or they do buy these plays off the open but have no idea where to take profits. And when the stock starts moving against you and the trade starts going out of your favor, you do not know when to cut the loss. So a lot of times you look at your watch list, you look at stocks around social media and you see that, man, these stocks, they popped 50 cents, $1, $2, they're up 20% in the first 30 minutes. And then that first hour rolls by and now you're looking for trades. You haven't put on a trade and you start to develop this anxiety and this FOMO and this need to, this urge to, I need to put on a trade. I need to put on a trade. At that point in time, you need to really ask yourself, why do you need to put on a trade? Why? You don't have to trade. You want to trade, but you don't have to. Okay. You're looking to trade, but you don't have to. So not every day, every stock is going to be tradable. Okay. And I really preach and I recommend to, get a handful of stocks, get a Rolodex of 5 to 10 stocks that you're actively looking at on a day-to-day basis. And why I say that is because you become more familiar with these stocks, with the way that they move and the dips that they take and the highs that they put in. Okay. If you're constantly seeking new stocks and you're constantly chasing every single thing that's green, every single thing that puts in a green bar, so many times I see traders, asking, is there any setups? Should I put on a trade? This setup, this stock just popped, and it's like the stock could be trading under all of the moving averages, puts in a green bar, and all of a sudden it becomes, the hottest stock. It's not the case. Today was a perfect example of that. Apple popped off the open here, got rejected as it came into the 50-day moving average on the 1 hour time frame. Okay. Second candle opens up of the day, tried to reclaim a lot of this supply here. Again, puts in a high, gets rejected. There is no setup on Apple. Yes, the stock was moving up, but what is your setup? You're running into supply here at the 50-day moving average. Second candle of the day clears out the 20, as well as the 100 EMA, as well as the 100 simple moving average and the 50 EMA. Okay. However, there's no trade here. If you got into this candle at this particular time at 7 a.m. Pacific Standard Time because it was green and you figured, oh, this could be a bottom reversal, what is the technical reason for entering this trade other than FOMO? Other than seeing a green bar on your screen, why did you enter this trade? There's no technical reason for entering this trade. Because we came right into supply, got rejected. Okay, come down, try to test support, break down, come down to the lower Bollinger Band. Here's an area where you could have said, you know, I'm going to bounce this stock off this lower Bollinger Band here. You could have got into this trade. It gave you about a 1-2 hour move here. Nothing crazy, nothing, you know, life-changing cash flow trade here. But again, you have to be versed in when to take profits. If you just think, oh, we got a reversal off the bottom Bollinger Band here, we came into all this supply here, we put in a high here, and you did not sell in one of these two green bars here off this lower Bollinger Band, you immediately became negative on the trade. Okay, negative on the trade. So you have to have a clear trading plan. If you don't have a trading plan, you need to learn one, or you need to create one, or you need to ask somebody, you know, the strategy, or you know, practice yourself and come up with a good strategy, implement rules, risk management, so forth and so forth. You need to learn the moving averages. You need to learn indicators. You can't just buy stocks because it's green, or short a stock because it's red, or you can't tell yourself, well, this stock sold off for 2 hours, so I'm going to buy the dip. How do you know that the stock is going to stop? Nobody knows. I do not know. You do not know. The next guy doesn't know. The hedge funds don't know. Okay, nobody knows where these stocks are going to stop, where these stocks could possibly go. All we have are indicators to help use as a guide. And if they break those indicators and they break those rules, we have to exit the trade. Or if we take a play and we're coming into a level of supply, you need to take profits, not sit there and tell yourself, well, the stock is green and it's been going up for 20, 30 minutes. It's going to continue to go green. Nobody says that the stock has to continue to go green. Okay. Nobody says that. So do not put on boredom trades. Today, Apple gave us no move today. Yes, was there an area to, you know, potentially scalp Apple for a few cents here? Of course, there's always an area of opportunity to scalp. But for the average trader, okay, you know, there was no legitimate setup on Apple. But potentially to the downside, could you have said, well, Apple, you know, went down 3 hours in a row here? Sure, but did you know that Apple? How did you know that Apple wasn't going to bounce at 148.21? How did you know that Apple wasn't going to bounce at 147.99? How did you know that Apple was not going to bounce at 147.83? There's just too many variables there. You need room in the trade, and you need clear levels of support and clear levels of upside. So on Apple, there was a potential trade over 149.05. Over 149.05 after this first hour candle here had potential to run to 149.32. That's a 30-cent move. Is it a big move? No, but it's an area to, you know, scalp 30 cents on Apple and take your cash flow and move about your day. However, if you enter into this trade here at 149.07 and it makes a push up to 149.32 and you say, hey, well, you know, it's green, it's going to continue to go green, and then it gets rejected and it comes back down. And now you're asking yourself, why did the stock go down? You need to understand areas of supply, areas of demand. Stocks are going to trade from supply to supply and demand to demand. Okay. That is what it is. So when you don't get a setup, a clear setup, like for me, I'll just use myself as an example. Okay. For me to want to enter into Apple stock, I need Apple to break 149.50. Why do I want Apple to break 149.50? Okay. If by looking at my chart, I want you to ask yourself, why does he want it to break 149.50? Okay. The reason I wanted to break 149.50 is because I wanted to show me, I wanted to prove to me that it's clearing out all of these sellers. It's clearing out all of these levels of supply. When it clears out those levels of supply and there's no trees in the forest, there's no, clouds in the sky above me, I know that potentially it has room to run to these previous higher channels. Okay. So 149.50 could potentially take me to 149.99, 150. That's a 50-cent move. If it confirms this, I know that it can potentially run to 150.23. I know that if it confirms 150.23, that potentially it can run here to 150.60. So for me, Apple, I have a specific trading plan. I have specific rules. Apple needs to break 149.50 for me to be interested in the stock. That is what it is. All of this noise in between here is exactly that. It's noise. It go up 10 cents, down 20 cents, up 40 cents, down 15 cents in a matter of minutes. Okay, in a matter of minutes. So it's very hard and choppy environment when stocks are trading underneath levels of supply, because they're going to test supply, get rejected, test supply again, get rejected, test supply, break supply. You think that it's going up, gets rejected. Okay, if that makes any sense. For me, if we look to the downside on Apple, because as a trader, you need to be able to trade long as well as short. So a lot of you guys do not like to trade short. Everybody loves to buy the stock and think that it's going to the moon. Everybody loves to buy stocks. Stocks are more fun to buy when they're moving up. Of course, I would agree with that. However, as a trader, if you want to do this as a career, do this for your profession, you want to be a long-term trader in this business, you need to be able to trade long as well as short. So if we look here, my 149.44, my 149.50, you see here on the daily time frame, this has room to stretch to 150.27. Okay. What I do see as well as that long pivot is I see a pivot to the downside here. Came down and is currently resting at the 20-day moving average. It had one push day down below the 5 and the 10. It had a second push day down that is now resting at the 20-day moving average. If Apple opens up on Friday and begins to build below the 20-day moving average, do we have potential to the downside? What is the answer? Yes or no? Are we going to play Apple to the upside because, hey, it has 2 red days? That's playing the hopium game. Okay, when you start hoping that a stock is going to go back up because it's down 2 days, now you're hoping. We have to react to the market. We have to react to the price action. Could this bounce? Of course it can bounce. If it bounces, then we take a look at an area of opportunity if it bounces. But to me, if Apple starts to build below the 20-day moving average, it has a lot of room to the downside. Absolute support being at 144.30. However, we would probably make a pit stop at 146 as well as 145. These are 2 potential areas where we can get into a trade. To the long side, it's 149.50. To the downside, it's a break below the 20-day moving average and a build. So you have to have a plan. Until the plan works itself out, there is no trade. So just to reiterate that point, until Apple breaks 149.50, I'm not entering a play just because the stock is moving up or down, if that makes sense. I'm not taking a boredom trade. I don't care if I sit here for 5 hours, 6 hours out of the market open and see that it's trading up and down. I'm not going to simply take a play just to take a play. It has to fall in line with my trading plan. Okay, so that's 149.50 to the upside, and that's 147.50 to the downside. Until it does that, everything else in between is all noise. Guys, I hope this helps you. I hope that training video helps you. I'm going to try to do more videos like that. Please like, comment, subscribe. It would help my channel out tremendously. Also, please, if you're just watching for the first time on YouTube, join my Discord, completely free community. Also, I do have a website kind of showing you guys more in-depth 22 videos over 2.5 hours of content in my course showing you guys how I trade these channels and why I trade these channels. That is down in the description box below. But until next time, I will see everybody on the next video.